and Marcom. These are just tools and one channel that will be discussed most particularly when we talk about demand generation, but we'll talk about that in the last episode. So today we're going to talk about key metrics every marketer should track. This is Hillary. I run Insight Onsite. I've been at Insight about 16 years, and some of you know me, some of you don't. I run the team of resources that is working strategically with our companies to help them in areas of growth. As I mentioned, Denise Brody and Maria Carbarosa joined me on the phone today. You can read their bios, both of them very experienced marketers. I've worked in B2B software marketing for many years in many different environments and bring with them a wealth of expertise to this webinar. The broader Insight Onsite team I also wanted to make you aware of. Rachel Geller is a principal at Insight and works with many of our companies. She spends a lot of time on pricing. Pricing was not one of the webinars that we put together, but is certainly something that we should do and can do a webinar on in the future. And then two of our marketing advisors who many of you have worked with, Julia Albright and Ashley Hart. Both of them are available and able to help you. Specifically what we can do and what we do for our companies is a gap analysis or a marketing review. Spend a day or two with your organization, looking at your processes, looking at your workflow, looking at your metrics, and provides recommendations and suggestions for how you can close the gap to be best in class and best practice. Please feel free to reach out if that kind of diagnosis would be of interest to you. And so now I'm going to hand over to Denise, and she's going to tackle the topic of measuring for success. One second while I hand over.
Great. Thank you so much, Hillary, for the warm welcome. Hopefully everybody hears me during the transition here. So as Hillary mentioned, from the workforce side, we've been on the modernizing marketing journey now for about 9 months. And I'm a big believer that if you can't measure it, then we should not be doing it. We restructured the marketing focus really into the big focus areas. So really around 5 pillars, all areas that were broken in some shape or form in the business. And what we looked at is how do we measure these 5 big buckets when we look at from brand to demand, right? And really brand to cash. So at Workforce and the marketing front, we're very much committed to integrating marketing, not just with sales, but to driving the overall business. So when you look at the 5 focus areas, digital, events, content, external communications, and business development, I'll just give you a little bit of backdrop. So when I walk through some of the measurements, you'll have an idea why they became the big buckets for us from a workforce perspective. So on the digital front, we had, and we still have 3 websites, right? The global website, we have a UK website, an ANZ website, and really very limited, actually no audience-based content at all. So we were not able to track the flow from brand to cash. And we had Marketo for 3 years, but it was not integrated into the web pages or hooked correctly into Salesforce in the background. On the events front, we have a couple folks running events, but you can imagine we had 90 events when we came into the business, and we were not measuring the ROI around the events. So what we really looked at is how do we introduce just basic things like a lead collection form that tracks, that everyone can use at the shows, and start measuring the ROI. And what I'm really happy to report back is that we've already taken during this time from 90 events to 60 events, and only half of those are direct. The rest of it we have to do because we have large partnerships through the various channels. And our CPL actually for the events dropped from 90 to 72 per lead just by putting in measurements around the events and being able to track the ROI and making the decision to cut about 1/3 of the events in 2016. When we came into the business also, and I think that it's appropriate that content is the middle cell here, We had lots of content, but most of it was either 15 to 20 pages of white paper. And if you're a marketer, you know that's probably more of the passive marketing. We needed to transition this into, sound bites and bite-sized content like infographics and videos. And we were actually not monitoring heavily the conversion rates. And ultimately, we had to ask the question, what content was actually relevant and for what audience? On the external communications front, the AR function was very sporadic, and we met, the analysts and talked to the press when we had major events or activities, but not on an ongoing basis. And we also spent things like money on endless videos that were very expensive and did not result in an ROI, to the point where when we came in, we actually took it off the website, just because it didn't really have a good measurement as part of the overall contribution. On the business development side, in our marketing setup, besides the traditional global marketing and regional marketing teams, we have communications in addition to a business development arm or inside sales. So we moved that team from sales into marketing to give them more specific KPIs around band qualified opportunities. So when we get the inside sales folks involved after a lead has been marketing qualified, we actually apply everything between, band, which is budget, authority, need, and timing, to qualify that and get it to 10% from an opportunity perspective. I won't go too much into detail unless you have some questions around the inside sales folks, but we restructured in 2016 that each enterprise rep would get 3 band qualified leads, and then each one of the mid-market folks would get 4. And we're pretty, now we have a great process where once a month, between myself as well as the head of sales and the various members on the team, including the RVPs, we actually go through every single AE's pipeline, and we look to ensure that they have band qualified leads and they've accepted their leads to the process. So again, as Hillary mentioned, there's not 200 leads sitting out there that has not been accepted into the process. So hopefully that gives you an idea of some of the opportunities that we had to change the way that we measured on the marketing front to really drive success. We actually did the handshake with the business to look at some of these key pillars. By the way, there's more KPIs in this, but these were the big bucket ones that I wanted to share with you. So if you look at the summary view of the marketing report card, you'll see that truly we're measuring beyond demand generation and pipeline, right? Every marketer is tied to the ARR number with sales and does not get paid on their bonus for the year unless the company makes the entire ARR number. So with this, what we looked at is, our goal this year is 15 million in ARR. And then, of course, we're not counting things like service numbers or, maintenance or existing customer base. What we're purely looking at is purely reoccurring revenue. So what we did was we came in and said, hey, our goal is to generate about a 6x pipeline that is qualified and has top of the funnel to have a rolling pipeline of about 90 million throughout the year. When we first came into the business, it was a 12x pipeline, which some will say, hey, that's great because the more pipeline you build for the business, the better. But that's not always the case. What we found is there was a lot of junk in the pipeline, and there was not enough movement through the funnel in a timely manner. And some stuff was sitting in the funnel for a couple years. So we really went through the process to clean the top of the pipeline, as well as making sure that we get to more of a 6x, which gives us more quality versus quantity. We also looked at the number and said out of the 15 million of the ARR, we would also like to impact about a third of that from an actual cash perspective. So we're following all the way from when a lead is generated until that opportunity is closed with sales. On the inside sales, medium side, we generate, our goal is to generate 780 qualified leads during the year. And then from there, also tie a revenue of about 7.5 million here. We looked at, as mentioned, content is really the center and changing the way that we digitize marketing as well as the way we're driving the overall demand. So last year we had about 3,000 downloads for the entire year, and our goal was to come in and get to about 6,000 with all of the updates around the content. We also wanted to drive about 40% of the opportunities from marketing. The other 40% comes from alliances and 20% comes directly from the AEs. The other big goal was to actually shift the marketing mix. Last year we had 60% of the leads coming in from events and 40% from digital. Our goal is to flip that and have 60% come from digital and 40% come from events. And as you can see in the report card year to date, we're tracking along, and the qualified leads were about 6.6 of our pipeline ratio. And what we also look at is, we're halfway to the qualified leads also, which is perfect considering where we are in the year. I think what was even more surprising when we looked at the ARR impact and being able to track it to cash, we're way ahead of that number right now. And after this month, the BDM should also be caught up on their numbers for qualified leads as well as in the revenue. I think here what you also see is that, look at the content numbers, right? Putting the right content to the right audience. In the last 9 months, we've switched out about 50% of our deliverables on the content front, and we've seen the impact of that, over 9,000 downloaded leads, where we've already beat our numbers for the year. The marketing mix has also changed as part of the process, and reducing the events, giving priority on the digital front. We are at 76% from a digital perspective. So I think here you'll see some of the results, and we're looking at this from the big bucket perspective. So, there's other measurements, as I mentioned. We measure against the social channels. We measure against, the ARPR pickup. We're looking at all sorts of analytics in the background, and we provide a detailed monthly report card that goes out to the business and that is shared across the board. So it's not shared just purely with sales, it's truly going out to the entire business, so that as we start to look at more areas, we can truly measure for the success and that liaison with the that particular business partner. So this just gives you a little bit of more details around the new MQLs that we've generated as part of the process. As mentioned, we had Marketo for 3 years, but it was not set up correctly to track lead to cash. So last year, we finally got the benefits of tying the lead automation to Marketo to Salesforce. And then, by the way, the other piece is you see the massive difference in the leads here. We've already generated, as I mentioned, over the 2,500 marketing qualified leads. And then what we're also looked at is that we were able to reduce our costs on the digital front from $60 per lead to $48 per lead, which is another savings for us. So when we're looking at the digital side, we're looking at everything that hits our website. We're looking at also some of the impact that is coming in through some of the content syndication engines that we're using and how they're consuming our overall content. As far as web traffic goes, anybody that is trying to shift their marketing mix is spending quite a bit of time looking at their traffic, web traffic details. We spent the first 6 months of the 9 months, as mentioned, modernizing the content. And the other piece that we did as part of the first 6-month exercise was also to improve SEO, which resulted in the direct correlation of improving website traffic, especially from the previous year. So as we launched the new persona-based website this past May, you saw a little bit of the dip, and that's just because we're coming in and re-indexing after the launch. The website is persona-based, it's simplified, and our goal really is that by the second half of the year, we'll actually have improved numbers as part of the web traffic. And here you can also see a little bit of the correlation between the differences, right? You may only have a global website. We happen to have websites specific to EMEA as well as APJ or ANZ, and there we see some of the fluctuations because there was an exercise that combined quite a bit of the content that we're fixing now in the June timeframe. So we'll expect to see, being able to, increase those numbers, but on average we're getting anywhere on the websites between 10,000 to about almost 23,000 hits on a monthly basis. So for us, this is great as far as getting the traffic. We're also looking within the website, we're asking ourselves the question of how much time are people spending on the site, as well as what does the conversion look like. And I think that pulls perfectly when you look at how do you measure content consumption, right? When we just did a blog around the recent changes in overtime pay, which fits perfectly into our compliance message on the workforce front. And we noticed that for this particular blog, people were coming in and spending about 4 minutes on the website at reading the blog. So as we just recently had announced an acquisition, we actually took the compliance blog and then we are now flavoring it for the retail industry as part of the content strategy. So for us, another key measurement is the content consumption. As mentioned, content is the center of everything we do at Workforce, whether it's building a campaign, updating the website, pushing prospects from the top of funnel to the bottom of the funnel, which are just a few examples, right? So last year I shared some of the data points, but what we really look at is we're trying to look at which content is most effective. And many times, when you're trying to play around with different things like, videos, for example. In the past, we've also heard, you have animation videos that are persona-based or has a more high-level messaging. They do a very nice job on the pickups and reviews, but what we also found is that we took a lot of our product videos, which were a little bit more boring at the beginning, and from there we transitioned them to role-based and had audience messaging in them. And by the way, that's actually one of our best pieces of asset that's been consumed. And now we're starting to localize that for all of the regions as part of the exercise. So I think that hopefully what you've seen is that the need to really tie everything that you do in your marketing charter with the measurable KPIs so that you can truly measure and stop whatever's not working or continue to add into the deliverables as far as some of the different things that are working as part of the process. So with that, let me now hand it over to Maria, who's actually going to share some of the different metrics that her team's also measuring as part of the best practices piece. So I'm going to hand it over to Maria here.
Excellent. Thank you, Denise and Hillary. Hopefully you can see my screen now. I'm so excited to spend a little bit of time with you and be able to share some of the metrics that that we are following. I put here on the first slide the key areas that we're focused on. So a lot of what you've heard already, brand health certainly is important, measuring perceptions from the broader market over time. Net Promoter Score is a really big one for us because it's all around customer satisfaction, and that is a driver or an indicator of retention. So we watch that one closely. Revenue contribution via demand generation. That is a huge one for us. Just like Denise and Hillary were talking about, and I'll spend probably a little bit more time on this one. So these are the metrics that draw a direct link between marketing and revenue, right? So we look at campaign analysis, we look at how we are influencing the sales funnel, and we do some very deep dive analysis on that. We look at customer engagement and what is the revenue that we can drive from customer engagement. And then we also look at churn and what are the risks associated with churn so that we can predict the activity there. Product marketing has turned into a really strong function for us. So we look at go-to-market strategies for every single product or key initiatives. We've got strong launch plans. We measure those. We measure post-launch metrics, product views, customer visits, leads coming out of it, and actual product usage. We also have now a really robust customer portal, and so we look at those metrics as well. And then sales enablement, so the go-to-market training for the sales team, all the assets that go to sales, sales support material, customer-facing assets. So as both Hillary and Denise mentioned, we really could do a deep dive and spend an hour or more on each one of these. But that's just to give you sort of an idea of the areas. And now I want to show you some of the sample charts and kind of talk to the way that we do reporting a little bit. First, I'll talk about campaigns and how we measure campaigns typically. So we'll have digital campaigns, and so on the digital campaigns, it'll be all about the impressions and how we're optimizing those channels, cost per leads, cost per click, the click-through rates, all that stuff. For email marketing, we look at open rates, click-through rates, unsubscribe rates. Social media, we are huge on social media. That has proven to be such a big driver for us, and I'll talk about that in a minute. And then other inbound, so organic search, direct traffic, referral traffic, etc. And so we drive a lot of traffic to our website. That's really the place where we capture, and it's the collection point for us. And then obviously we look at the demand that comes from all of that. So it's the MQLs, the SALs, the sales qualified leads, the opportunities, et cetera, et cetera. And then we do analysis on all of that, and then it just is fed back up to the top. And so that gives you sort of a, brief overview of how we do it. I should mention that the technologies that we use, currently we've been using HubSpot. We're moving to Pardot. We've had HubSpot for about 2.5 years since I got here. We've outgrown it, and we're moving to Pardot right now. So within the month, we'll have that integration done. So that's pretty seamless integration with Salesforce. We use Cvent for event marketing and event management, and then we use GoToMeeting for webinars. And the good thing about Cvent and GoToMeeting is that they push directly to Salesforce. So we've got, in everything that we do, we've got seamless integration with Salesforce. And that's what we look for, so that we can have some really, really robust and detailed metrics. For a sample campaign, you can see our scorecard. So we look at, by campaign, we look at the impressions it drove, the websites, the MQLs, the MQL conversion rate, the acceptance, so sales accepted lead, cost per lead, the opportunities, the pipeline it generated, the number of wins, and the bookings. So, and then obviously on the right, the spend. And so by campaign, we really look at the success of the campaign, the learnings from it. Sometimes you learn just as much from something that didn't work as from something that did. But because we've got seamless integration with Salesforce, we're able to, in a very detailed way, look at the success of every campaign that we did. Multi-quarter, we also look at what's working, what's not. So again, you can cut this data in any way. So we look at our events, so drilling info events that we did, third-party events, webinars, inbound, other activities, and by each one of those we can say, okay, what are the MQLs that it drove, the conversion rate, sales accepted leads, etc. And you can look all the way down. The number of opportunities, the dollars, how many wins, the dollar number in the wins, the close rate, and the average order value. And when you look at things like this, it's really interesting because, for example, in our discussions internally, some folks will say, oh, do webinars. Webinars are free, they're inexpensive. But if you look at webinars, for example, there's a small conversion rate up top from MQL to SAL. However, those that do come through convert very, very, very well into opportunities, and when they do convert, the dollar amount is a good dollar amount. And so what this allows us to do is it says, how do you manage your marketing mix? We review the trends, and we've got very proactive management of the mix, and it allows us to just be smart about the way we do things. And you can see that we drive a lot of traffic to the website. So the website in many ways is the collection point. If somebody doesn't become an MQL, say at an event or at a webinar, they may very well become an MQL later on their own. And so you can see that that's a big collection point for us. We've been very big on driving traffic to the website and on social. Who would have thought? Our traditional audience are geologists, geophysicists, petrochemical engineers, and who would have thought that Facebook was going to be a big asset for us? When I started here 3 years ago, we were not at all maximizing any of these channels, and they've just become huge for us. So focusing on the website, we've driven traffic from around 20,000 when I first started to now we're averaging about 120,000 unique visits per month. Facebook followers, Facebook has just become a huge channel for us, and again, it's super detailed. Deep industry content. So all of those followers really are looking at information that has to do with drilling, exploration, and insights from the work that we do. So we've gone from, surprisingly, even to me, we've gone from 3,000 to 75,000 Facebook followers in the last 2.5 years. Our blog is a huge asset to us as well. So honestly, I encourage you guys, rich content is what's driving all of this. We've been named the top blog in the oil and gas industry, and that's huge for us as well. So now on a monthly basis, our reach is roughly 100,000 people per month, which we're very, very happy with, and continue to try to improve that all the time. This page, if you will, I'll spend a minute here. This is in many ways the linchpin of our reporting. I'm showing you a quarterly view, but we look at this exact same table on a week-to-week basis. This is the new business driven by marketing. This is not renewals. So these are leads specifically driven by marketing activity. And you can see over the quarters, we have a commitment to deliver 14,000 leads with a conversion rate of 20% into sales accepted leads. That's our commitment to the sales team. And there you can see everything that we've been talking about. So from MQLs to SAL, the number of opportunities, the dollar amount of the opportunities. You can see the actual open pipe, the average open pipe over time, and then all the way down to win dollars, win rates, etc. We review this on a week-to-week basis. As Denise said, we also review it with our sales counterparts in detail. And we publish a detailed sales funnel report, which is based on this information. We look at it by activity, by event. We look at by sales rep, the number of leads, the aging of those leads. We look at it by group so that we can look and see how the management of that group is doing. We look at it by salesperson. We look at the open pipeline and how that is phasing through the quarter. So we know that in the next, of the 8.3 million that's open, when that is supposed to close over time. And so we deliver a roughly 40-page detailed report every week. And And it's really what enables us to be transparent, accountable, and this is honestly what has gained us just a lot of credibility with our management. When I started here, I didn't give you any context. When I started here, much like Denise, there were no metrics, no measurement, very, just well-meaning folks, but very little accountability. So being able to do this is what's really driven that confidence in the marketing team as being a driver of growth. So the more that we can position ourselves as being a driver for the business, the better all things will go. I'll quickly go over this one. This is very, very interesting too, because we said, okay, in the process of generating new leads and new business, right, and dealing with people who are not currently our customers, we also invite our customers. They just land on our net. They hear about events. We actively invite them to events. And so the fact is that we're engaging with customers a lot as well. And so we said, what is the business value of that customer engagement, right? Because remember, the previous chart is new business. This is existing customers. So we said, all right, so what we now have about 6 months worth of this data. And so we said, what happens when people attend our learning engagements versus, and by learning engagement, I mean when they spend a little bit of time, right? So they come to a webinar, they come to a training session, they come to a seminar that we give, something like that. So what happens to people that attend versus everybody else who does not attend? And so if you look at the bookings increase, they increase at a higher dollar amount, so 4x. So they pay us about 4x more than everybody else. So that's that first chart there on the left. So the renewal bookings increase. So that has an annual run rate of about $2.4 million right now. That's incremental to the business. They deactivate less. That's the middle chart. So people who attend deactivate at about a 1.5% rate versus everybody else at about a 4% rate. And the churn rate, by the way, is decreasing faster in people who do attend. So, and that has an annual run rate of about, just a little over $1 million. And then they also use us more. So usage goes from about 6% to about almost 11%. So if you annualize all of this, just in the last 6 months that we've been measuring it, it looks to be about $3.5 million of additional benefit related to people attending our events and declining churn among those who attend. So this is very valuable too. This was hard to do, I will tell you, and we have a fantastic business intelligence team that is super smart and is able to measure these things. One of the smart things I did when I first started here was get a bunch of smart finance people to come be part of the marketing team and help us measure these things. That's why we appear so credible, because of the metrics that we deliver. And so I'll go fast on these because it's not the focus of today, but we've gotten very robust at measuring product launch plans. And so there's a ton of work and a ton of assets that go into this. And you can see this is a sample, but we have what are the internal activities that happen, who are the target personas that we do focus group or we do pre-launch teasers in app, etc. What goes out to all customers of Drilling Info, and then what is the external promotion once the thing goes live. And we have this for every launch that we do, and we do a lot of measurement around it. And a quick snapshot of product usage that we're measuring post-launch is we're saying, okay, what's the user, who are the unique users, or what's the increase in unique users, the amount of customer visits, and actual business leads that we drive from product usage and product marketing. We've just started measuring this. You can see we've started doing it since March, really. but we went back a little bit of time just to give it context. And that I've gone fast, and it's a ton of information, but those are the big things that we measure. It's been a wonderful journey to build this function and see how it really is a driver of growth for the business, and you really can demonstrate it. So with that, I'm going to pause and turn it over back to Hillary for any closing remarks.
Thanks, Denise and Maria. There's been a couple of questions that came in, and for those of you who are listening in, please send questions, type the questions in the question box in GoToMeeting, and we'll be able to relay those to the rest of the group. So the first question that came in, and I'll let you both answer it in succession, is could you describe a little bit more about your marketing tech stack, and how are you managing to track these analytics? What kind of processes have you put in place to track the analytics? Is it all done through the systems? Do you do some of it manually, or have you set it up so that you get these automatic reports? How is the analytics performed? Denise, you first.
Yeah, sure. Thanks, Hillary. So we do a combination of both. We get some of the stats out of Marketo. We also follow through from a Salesforce perspective to look at the, cash that comes in as part of the overall process. I did not mention, on the ARPR side, when we look at things like, for example, how many pickups we get, some of the different media tracking, some of the analytics, we use Meltwater in the background for that. So when we send the monthly report to the, to the business, we do have to pull stuff from Marketo, from Salesforce, and then from there, merge the stuff that we have also from Meltwater. And then on the social front, we also use Hootsuite. So as part of, looking at how many impressions that we get through the various channels, and, it would be awesome if there was something that was all the information into one, but that's not the case. So we actually merge that manually as part of the monthly process. And then, we also are getting some of the content syndicator information as part of the process as well. So there's one other piece for the inside sales, but what we look at is everything that we touch as part of marketing has, the measurement that goes to the business as part of that. So to the business, it looks seamless. On our side, we do have, between the various functions, someone that helps us pull all the reporting from the siloed systems into one spot.
Maria?
Yeah, and hey guys, I am going to introduce, to answer this question, Laura Hamilton, who's our Senior Director of Demand Generation. She really is the architect of how we capture and measure all of these. So I'll let Laura answer that question.
Thanks, Maria. So I think, Maria mentioned earlier that we rely heavily on our marketing automation system, which is integrated into Salesforce, and then Cvent and GoToMeeting, which are also integrated. For the most part, our metrics all come from Salesforce reporting. So we dump everything we do into Salesforce through one channel or another. And then our business intelligence team pulls a series of reports. There is some manual compilation of those reports, but Salesforce is really sort of the record of truth for us. And it is on the sales side as well. So there's, there's kind of a saying that if it's not in Salesforce, it didn't happen. So there's a really strong adherence to using Salesforce on both sides of the fence, and that's where most of our metrics are compiled. I will say that we do have to pull some separate reports in Salesforce, and there is a bit of manual scrutiny and scrubbing to make sure that the waterfall conversions are accurate, and a kind of a QA check. But the one exception I would say to that, with regard to our Customer Learning Center, that is not integrated to Salesforce, it's integrated to our application, and so that data has to be pulled separately. And then for PR, we use a tool called TrendKite. We did used to use Meltwater, and we converted over to TrendKite just for ease of use and the way that their dashboards are set up. So that information is pulled separately.
Cool.
Thank you, Laura. That's great. We've had another question come in, and this one's about blogging. So in particular, you know, it's a question for you, Maria, and maybe it's for someone on your team, but on the analysis of existing customer engagement and the positive retention metrics, oh no, that's not the blog one, sorry. Sorry, there's several questions coming in.
Sure.
The one question folks had was, how are you increasing your blog subscription and your audience, especially in a B2B type business? You know, what are the types of posts that you're publishing that people are clicking on, and how are you promoting them such that you're getting a business audience engaged?
Absolutely. Well, our audience, as I mentioned, is a very technical audience, and so you can't fluff those guys. And so we use our subject matter experts internally to generate ideas and to even write the beginning of some of the posts. And then we have an editor, a blog editor, whose job it is to make sure that we have a robust pipeline of postings. And then he does he makes sure that there's good flow, that there's good content. He turns it into English, especially because, you know, some of the subject matter experts internally are very, very technical. But that's what gives it the depth. We add things to make it be compelling. We add good visuals. We add good headlines. And then and here's why digital and social is so important. We post the blog, but then we promote it through our social channels. And so I would say two things. I would say you've got to have really robust content that matters to your audience, and it can't just be super technical. One of the other things I really like about the blog is that sometimes it's macro and it looks at big trends. It looks at what's going on macroeconomically, and then sometimes it's very technical and it gathers insights from our own data. And so we have a really good mix. So that's one. And two, we promote it digitally. And I will tell you that we've been so pleased with how the blog is performing. Forbes actually came to us about, I'd say, a year and a half ago and asked us to be a contributor to the Forbes energy page. And so twice a week we post additional articles in Forbes by Drilling Info, and then we repost them obviously on our social, and sometimes there's a good link to our blog. Yeah, good.
This is Laura Hamilton again. There's one thing I would add to that, a third element, which I think is super important and is easily missed, but that is consistency. So we have been pretty maniacal about twice a week
Yes.
blog publishing and on the same day each week.
Yes.
And at the end of the week, we do an additional added value feature to our blog subscribers where we curate the top 10 articles in the industry press and kind of say, here are the top 10 things you need to know this week. And I think that does a lot to, because people can count on the fact that you are truly a news source on a consistent basis. So the return visitors drive up the blog subscription base as well.
And one last thing about the blog post, we really encourage our folks to be contributors to that. It's not just the super technical folks. So on our team, the product marketers are all requested to do blog posts, and you would be surprised. We've got some new people who are these are like MBAs, right? And they're just smart people. And they will come in, and in 2 months from having come in, they'll write a blog post that will get 20,000 views. It's been a lot of fun to watch.
Great, thank you. The next question is for Denise, and it's a question around your organizational structure, Denise. So, when you started, what did you have, and what do you have now? How many people are focused on digital versus events versus product marketing versus lead generation, etc. Could you give a little background on, how you may have changed your team and what the composition is now?
Yeah, perfect. So we started in marketing with about 13 people, and even in the last 9 months, with all of the organizational changes, we still have 13 people, and that I'm not counting the inside sales portion. So what do we do? First, we introduce, and I think I mentioned this in the webinar, which is, content is the center of our universe. So when we looked at this, it was very important to have somebody to cover product marketing. So we added a product marketing function, which did not exist. One, we wanted to elevate the messaging and positioning, get it away from products. We introduced the tagline around making work easy. We also started to fine tune some of the, messaging and positioning across all of the various content. We reduced the bill of materials. So that was the first part from an organizational perspective. Then we started to look at, initially there was 4 folks on the event side, and because we were reducing events and there was some organizational movements, we trimmed that down to only having 2 people on the event side. We added a regional person in EMEA for coverage. We have one also for Australia. And then the rest of the team is covering everything between graphics to somebody dedicated to the web development, to covering Marketo. And as we had a little bit of a transition in January, Merve Sooner is also on the call with me. She also sits here in New York. We consolidated and collapsed and had her move from the product marketing function to leading digital and content. And with that, we put all the digital folks underneath that portion, along with the product marketing team. So we have about 13 folks, and I also forgot to mention we have a dedicated person for AR and PR, just to keep that whole portion of the external communication streamlined. And then we have another person to cover exec comms as well as social. So that's the setup and organization of the team. And by the way, even with all the changes in the 9 months, we haven't increased the headcount. We just started to have a better coverage and change the composition and the coverage for the team versus changing the headcount.
Great. Thank you. Maria, could you give a brief description of your team?
Yeah, absolutely. We are organized. So again, when I same thing. When I started, there were actually 3 people here, and now we have 18. We are organized in 4 groups. One is demand generation. So Laura Hamilton leads that, and that has to do with events, Marcom, all digital marketing, the website. Am I forgetting anything, Laura?
No, that's it.
Events, yeah, I mentioned that. Then our other large group is product marketing. That's led by Martha Aviles, and she's got 4 people on her team, and those folks create a go-to-market strategy working with the product team and for every single product that we have and for every key initiative, so that there is a real understanding of what is the product, what is the value proposition, and then they create all of the assets that are, from white papers, videos, ROI calculators, everything. They create all the assets for sales enablement and that are customer facing. And then, the demand generation team uses all of those assets to do widespread promotion. Then another very, very important group for us is business intelligence. That's led by Jason Powell. And that group measures everything that we do. They do all of the reporting, and that group certainly did not exist when we started. And as a company, we were a company that in many ways made decisions without data. And so now we've got all kinds of analytics around who are our customers, where do they buy, how do they buy, what are the trends, both internally and externally. And it's been a very, very valuable thing for us to have. Jason actually came from a finance background, but had a great deal of interest in in business intelligence. And so it's very good, in my opinion, to have that capability within marketing, because we're so digital now, we're so data driven that we need to consume our own data so that we can make intelligent decisions. And having business intelligence, a robust team of business intelligence people, that allows us to do that. And then lastly, we have corporate communications, and that is the blog, all of the media relations, and executive communications. That's how we're organized.
Great, thank you. With that, I'm going to end the webinar, and thank you both very much for your contributions. We look forward to hearing five more. And for those who are on the phone, if you don't mind providing your feedback to Alexa Bennett, so abennett@insightpartners.com, particularly any questions that you have, any comments around how we could make these more useful for you, and any particular questions that you have about the subject that comes up next, which is sales marketing collaboration. And so thank you, everybody, for joining, and have a wonderful weekend. Great. Thanks, Maria and Denise.
Thank you very much.
Thanks. Bye.
Thank you all.